Hi everyone, Buyer's Agent Jay Pace here for Providence Property Group with a market update for the month that was October 2023. We are a national buyer's agency with offices in Sydney, Melbourne, Brisbane, Adelaide, Perth. We believe there's always an opportunity somewhere, and we help you to be a player and not a spectator in your wealth journey, focusing on quality properties over quantity, operating through 3 decades. Our experience will ensure no sleepless nights worrying about property markets. So on this channel, we talk about all things property, but most importantly, I read the news and separate fact from fiction so you don't have to. All right, let's have a little bit of a chat today about the markets. Now, as today is Melbourne Cup Day, I asked AI to create an image of a horse race with each horse representing a different Aussie capital city and their rankings based on the 2023 performance. Now, it created this image in only a few seconds, and it didn't quite get the wording correct because I've never heard of Hoberta, I've never visited Canterra, and I didn't realize that I've spent my whole life living in Sinfi. Now, technology is accelerating at an incredible pace, and it's important that we try to keep up with it. Last month, we broke down the costs of delay per week because I'm getting lots of clients as we're getting close to the end of the year who just start running out of that momentum. You know, it takes a long time to get your pre-approval together, to decide you're going to buy a property, to get into that market. But I'm just starting to hear more and more people say things to me like, maybe I'll just wait till next year. I've got no problem with that. I'm happy to take a little bit of a break. That's no issue for me and my team. The issue is going to be this. Is that when that person comes back in February next year wanting to buy a property, then realizing that every week they didn't buy, the market was going up $1,000+, they start to get frustrated that those prices have gone up so much, and then they start to pull back on how much they want to spend. This is why there is no better time to buy than today, right now. There's going to be less competition in the market over the next couple of months, and believe me, no data is suggesting that there's going to be more product on the market to give you better options. I can guarantee that, and I'm going to show it to you in this video. We can see here that Sydney increased by $101,000 this year, or $2,300, $2,300 per week. We can then see Perth, second place, top right-hand corner, $86,000 increase, $1,600 per week. Brisbane, $60,000 increase, $1,400 per week. Adelaide, $45,000 increase, $1,100 per week. And last, Melbourne, $36,000 or $400 per week. Now remember, these are averages. So if you're trying to buy an above average property, by the way, you're definitely going to end up paying more than that. In October, dwelling values rose in each of the capital cities except for Darwin. Darwin was down 0.1%, so no real movement there. Perth increased by 1.6%, Brisbane increased by 1.4%, Adelaide up 1.3%, continuing to outperform the other capitals. 3 capitals have seen dwelling values rise by more than 10% over the first 10 months of this year. That was led by Sydney at 10.9%, Perth at 10.8%, and Brisbane at 10.2%. Now, the data also showed that regional markets are returning to normality by continuing to lag behind their capital city counterparts. I've said it before and I'll say it again, we don't like regional areas for capital growth. We think it's way too risky, not enough population growth drivers in there, too much volatility. But because we've had some recent growth since 2020 in those regional areas, there's a lot of people that believe that there's a bit of a gold rush going on there. I would stay away from those areas. You're just rolling the dice. Stick to areas with long-term data and growth prospects. Now, it looks like the media has definitely changed its tune when it comes to what's going on in the markets. Australian property prices were not long ago expected to fall as much as 20%, but instead, we've recorded the shortest and sharpest downturn since the 1980s. Record household savings shielded owners from having to sell their properties, and motivated buyers continued purchasing largely unaffected by rising interest rates, returning prices to near all-time highs and avoiding Armageddon. Now, according to the largest accounting firm in Australia, KPMG, house prices are going to rise nationally by about 4.9% over the next 9 months, and then surge by 9.4% for the year ending June 2025. I think that's really interesting. And again, looking at their data here, they've explained their performance and what they believe. I don't believe everything. I don't agree with everything that they've written down, but the table does show that Perth is expected to increase the strongest during that fiscal year of 8.4%. I don't agree with Hobart. They're saying Hobart's going to be up 14.2. We've got nothing against Hobart. Linton Stevenson, one of our directors and owners, is originally from Tassie, but there's no way that that's happening. It's just there's no catalyst there for us to see that type of growth. Now, this was an interesting report. According to Domain's September quarter house price report, Australian housing market is near full recovery from the 2022 downturn. Only about $2,000 separates houses from new record price and $5,000 units from new record prices. So an outcome set to be achieved definitely before the end of this year. But you're not going to read about that or see that in the news because it's not really a sexy thing to talk about, is it? Overall, there's definitely still not enough property to satisfy demand, with listings almost 20% below the 5-year average. And a lack of listings is most extreme in Perth, where listings are almost 45% below the 5-year average, while sales activity is almost 25% above the 5-year average. So listings are 45% below and the amount of people want to buy is 25% above the 5-year average. No wonder it's going gangbusters. It's going to the moon and it will for quite some time. Now, if we also have a little look on the other side of the spectrum, we'll see that the ACT had a total listing rise of about 21.3% through to spring to November. And listings are up 10.7% in Melbourne, 9.3% across Sydney. Hobart has had the largest listing increase, and that's probably showing you as a direct result as to why the property prices there have been dropping so much this year so far. Annual change in rents. Well, rents are still rising, and Perth, as you can see, has taken the crown of annual increase for both houses and for units. 12.7% increase this year for houses, 16.6% increase for units. And the gross rental yields for dwellings across combined capitals is 3.5%, as you can see there. Now that's 3.5% gross. So let's do some quick numbers. I buy $1 million property. I'm getting 3.5% annually in income. $35,000 is my income that I'm receiving. Then I pay tax on that, rental management fees, insurance costs, maintenance, maybe some strata. So that goes down to 2% pretty quickly. And then I've got a 6.5% interest component just to hold on to the property and that loan. So that means I'm already negatively geared by about 4%. Now, can you see why places like Sydney at 3%, Melbourne at 3.4% are unattractive? Can you see why places like Brisbane or Perth at 4 and 4.7% are definitely attracting more investors? So we can see that data there. It makes a lot more sense. Rental vacancy rates. We see rental vacancies continuing to drop. They're currently 70% below their 10-year average. So the 10-year average is 3%. We're currently at 0.9. So it's a 70% drop there, showing that there's just not enough properties only for sale, but also to rent and live in. Now, during the 2022-2023 financial year, Australia saw an increase of only 169,500 new dwellings. This number fell significantly below what is required to house the record 626,000 growth that we saw in Australia's population. According to the Australian Bureau of Statistics, only 134,300 housing constructions were approved over this year. Now, the current pace of construction is lagging by approximately 75,000 dwellings compared to the annual need of 240,000 new dwellings. Okay, so we need 240,000 new properties every year. How the hell is the Albanese administration going to build 1.2 million new homes within a 5-year time frame starting 2024? It's a genuine question. I'd really love to know. Now, this chart is a great chart because it shows dwelling approval commencements and completions collapsing to decade lows. And at the same time, it shows the nation's population exploding. So they're inverse at the moment. We've got the amount of new dwelling approvals and completions dropping like this, and we've got the amount of people entering our country going like that. So it is going crazy, straight up that green line. And we've been talking about population growth for months now, since late last year. Now, according to the latest data from the Australian Bureau of Statistics, the number of loans issued for the purchase and construction of new homes remains at around 20-year lows. Okay? So people just aren't buying new properties or buying to build new properties. The federal government announced a target of 1.2 million new homes over 5 years from 2024. Now, the scary truth is that we've never built that many homes over a 5-year period, and we're already off to a pretty bad start. The closest Australia has ever gotten to building 1.2 million homes over 5 years was in 2015. We built 1,500,000 homes from 2015 to 2020. Okay, so we were off by 150,000, and this was also a period in which we saw the biggest influx of Chinese capital ever recorded, and that was due to the significant investment visa. Google it. Thousands of apartments were built across our CBDs and close to universities, and thanks to new restrictions on overseas investors, Chinese capital has almost evaporated, and there is nothing as significant to actually replace that. So I can't see that changing anytime soon. So the question should not be, do you think property prices will continue rising? Okay, I've shown you limited housing supply, okay? Dropping amounts of construction, low vacancy rates resulting in rising rents, exploding population growth, high auction clearance rates, low unemployment. All of that together only says one thing for me. The question should actually be, what are you waiting for? So if you're someone that is thinking about buying a property, whether it's now or even next year, what are you waiting for? Jump in, do it now. I'm telling you, you're going to regret it in a couple months' time. I speak to people every single week that wish that they could just go back in time and buy something earlier. You've got the chance, do it now. Let's have a quick chat about interest rates. So today the RBA decided to hike its cash rate by 2.5 basis points, or we're currently now at 4.35%. It's a 12-year high. The increase widely was anticipated by economists. It was no secret to me and other people that I talked to that, the RBA is going to increase rates. Now, the central bank's done their 13th rate rise since May 2022. That's where we're currently at today. It's just the way life is. Now, inflation is still well above the 2 to 3% band with which the RBA aims to get into. And I've got that on the chart there to show you. And we did see a reduction in inflation in September quarter, reducing to 5.4%, which is much lower than the peak that we saw in December 2022 at 7.8%. Now, the interest rate rise today was driven by the fact that inflation is coming down, but again, they're just not happy with it. It's not happening fast enough. Inflation's a bit too sticky. So that's probably what we're going to continue to see. Let me finish off today's presentation by having a quick discussion about some recent purchases. We've been very busy lately, and here's some great examples. Often we get clients wanting a mixture of both income and growth, and we bought this 15 years young property on a 330 square meter block. Now the client wanted low maintenance and a modern property, and typically when you're getting something low maintenance and young, you're getting it on a smaller land component. If you want something with higher maintenance but a larger block, you're getting an older property. So this is that compromise that we had to make. It's a 3-bedroom, 2-bathroom, 2-car space house. We bought this property. Location's great, surrounded by a host of amenities. It's near schools, shops, etc. You name it. It's near a marina, so it's close to the water. When it comes to East or West Coast purchasing, we try to buy as close towards water as possible because it's a desirable location for people, and it always will be. It's a really beautiful internal, it's a nice property, it's modern, it's going to be very low maintenance, it's just an easy buy. Really meat and potatoes investment style property. Now, it's 34 kilometres north of the CBD in Perth, $526,300, rental estimate conservative at $540 a week, which is about a 5.3% rental yield. Now, the property is currently tenanted at only $500 a week, but it's going to get renewed in February next year. And the clients opted for this because they didn't want any vacancy risk. Okay, they wanted somebody in there, so from the day they take possession of that property, they're getting an income. And that's where they were with this property. It's 500 metres to a train station, 400 metres to the shops, 2Ks from a major shopping centre, and 4Ks to the beach. What a spot. Makes total sense. Now, This was actually a really great property as well. We had an overseas couple looking to buy a home for when they returned to Australia, and they wanted something boutique, close to amenities, and in a nice area. We secured this beautiful 2-bedroom, 2-bath, single attached garage level, ground level unit for only, we got it 4 kilometers from the CBD, okay, 100 meters from popular cafe strip. And you just have to see this because ethnically, my Greek, Maltese, and Italian background automatically wants me to not look at units and look at houses, but this is definitely an amazing unit, okay? It's sun-drenched, open living dining area, ground floor position, which are always more popular, extremely functional layout. There's just heaps of potential here to add value with a renovation and landscaping this massive courtyard that I'll show you in a moment. Our team purchased this for $30,000 less than an inferior unit opposite the street, okay, without a courtyard, and we also viewed that, all right? Now, we negotiated also $2,000 reduction off the price because the building and pest, we saw some findings in there that we flickered with, and we were able to get a little bit more money off that. Great, we were very happy, more than paid for the building and pest inspection. And we were victorious under very strong competition because we came to play with superior contract terms. And terms are really winning us a lot of our purchases at the moment. Now, we moved decisively and quickly with an offer which the agent and the seller appreciated. They didn't want to get mucked around, and this contributed to securing the property. We're really, really happy with it. Now, the unit is on a huge internal living space of 97 square meters. I bought a 2-bedroom unit for a client the other day in Melbourne, which is notorious for being small of internals. And that unit that I purchased for that client was 63 square meters internal as a 2-bedroom. This is 97, but it's also got a beautiful 25 square meter exclusive use outdoor space. It is fabulous. I'll show you the photo here. The crazy thing about this in Brisbane is that I'm here in Sydney and we're buying properties for clients, houses for them in the western suburbs. It has a bigger yard than some of the homes that I'm seeing in some of the western suburbs, which is crazy. Forget some of the eastern and northern beachen suburbs. They don't have yards like this unless you're buying a huge, huge house. I'm talking about a townhouse or a normal house. They don't have yards like this. So really unique, really impressed with this. 4Ks from the CBD, $688,000, $600 a week in income, 4.5% rental yield. Like I said, unique unit with a land component, you know, boutique block, superior location. It's just a great buy. This one's also one of my favorite ones for the month that I just had to put in here. We picked up this massive 261 square meter home on a 598 square meter block for a self-managed super fund client looking for growth. Now, when I showed some clients this photo, they thought it was a unit block. No, it's just a 3-story, old school, red brick, great bones house that's also been renovated inside. You'll see some photos in a moment. The sellers were in this for 40 years, so they showed it lots of love. Like I said, it's 3 stories, it's in a cul-de-sac. It also has a beautiful pool and outdoor entertaining area. These features are the difference between an investor property and an owner-occupier property. And investor properties sound good because you might get them a little bit cheaper in the beginning. The problem is that they don't grow as much as your owner-occupier style properties. We buy properties that will appeal to investors and owner-occupiers. I just don't want that 30% market share. I want 70% owner-occupiers as well. I want that whole pie. So when it comes time to selling, our clients will not have to compromise on profits when it comes to this property. So, I mean, look at that outdoor area. It's absolutely gorgeous. 8.5 kilometers from the CBD, $1,350,000 purchase price, rental estimate $875 a week, which is only 3.3%. Better than what you're getting in Sydney and better than what you're getting almost in Melbourne. But remember, this is an SMSF purchase. And what do SMSF purchases usually do? They have larger deposit amounts. So based upon the current 30% yield that we were looking at, the client's going to get a 4.8% rental yield, but I believe the client's going to go closer to 60% and get over 6% rental yield for this property. So it's not going to cost them much to hold. Why do I love this property? Superior location, strong red brick, low maintenance house, no strata. The suburb has had an average of 20-year capital growth rate of 8.2%. per annum, so that we expect that this home's going to be worth in excess of $2.2 million in 10 years. It's going to by far be the best performing thing in that client's self-managed super fund. Remember, we can't help you until you commit, and once you commit, we won't let you fail. So we're bringing two things together here: your desire to build wealth and our 18 plus years of experience of buying properties as Providence Property Group. So for more than 3 decades, Providence has helped Australians open up a life of opportunity through real estate, giving them the future that they want. We buy unique quality assets in areas where demand outpaces supply. And we focus on properties that appeal to a much larger audience. Like I said before, I don't want that 30%, I want that 100% audience, okay? We buy in the right capital cities at the right time, guided by economic property cycles. We buy the property which is uniquely suited to your situation, which will act as a springboard to your next wealth building stage. This is how top performers build wealth, and this is how Providence builds wealth. So if you like what you've seen here and you'd like to be kept in the know with the Australian property market, make sure to like this video and hit that subscribe button. If you'd like to further your education, you can download our ebook. The links are in the description below. I want to thank you for your time today, and I want to wish you the best of luck, hopefully with Melbourne Cup, and I will see you all next month.